Hi, good afternoon. You're watching Closing Trades on ET now, and the closing trades have turned into a red a bit. When we started off, we were well in the green, cruising around the 23,150 mark, but from there has been a bit of a slip. We are in the red at this point of time. In the last 1 hour, we have seen a bit of a selling pressure creep in. It's M&M, which is down almost 3%. Shriram Finance on that IFL Securities downgrade is coming under pressure. And then some of the other financials, the likes of Axis Bank ahead of its earnings, Bajaj Finance, Bajaj Finserv, these stocks are under pressure and are the ones which are in the red right now. The Bank Nifty too has turned red. We are staring at a level of around 48,680 on the Bank Nifty. It's Axis Bank which is very weak ahead of its earnings. Bank of Baroda, PNB, IndusInd Bank, ICICI Bank. These are the names which are in the red at this point of time. Just taking stock of the broader markets as well, wants to take a look at what is doing well. It's Devyani International, which is up 9%. That Macquarie initiation on QSR space, wherein they are calling Devyani as the top bet within the vertical, is definitely having a good impact. So that stock high by 9.5%. A few of these textile companies are also in focus. Alok Industries is up. Welspun Living, the last time I checked, was up. Raymond's was doing quite well. Trent is doing quite okay. Some of these stocks are in focus on account of the textile news that we talked about, how the budget is likely to put more focus on that. And then Trent got an initiation coming in from Elara as well with a target price of 8,500 rupees. So that stock is in the green. And then the other bunch is the capital marketplace. So BSC, that initiation from Nuvama, HDFC AMC numbers being good. That has had a rub-off impact on the likes of UTI AMC as well. 361 is doing quite well. KFin Technologies has bounced back. HDFC AMC, of course, has bounced back. And then I show these platform companies, Nykaa, Zomato, Paytm of the world. They're up anywhere between 4 to 7%. So today, broader market strength is something that is worth taking note of because the frontline index is still down and out.
Yeah, look at Zomato. That's up about almost 4% right now. And this after two sizable block deals that took place just yesterday on opening bell. Nykaa is up today. HDFC AMC is holding out very smartly. And then BSC, of course, which has got two upgrades coming in this morning. That continues to hold up 6%. Even Idea, after that significant loss that it's seen from its 52-week peak, that stock also surging higher by about almost 6%. Trent, of course, has come back nicely. NTPC is looking good. Maruti, Techem, these are all names which are holding out, and Reliance as well providing that apt cushion to the index. But having said that, the index hasn't quite resurrected. It's still just mildly soft, about 56 odd points lower as we speak right now. Kalyan Jewellers is the one, of course, which is getting a whack once again. Another 10% of a move down on this stock. HPCL is down about almost 4%. There's Glenmark and Cummins. These were also laggards in today's trading session. But let's talk about the movers, and we've been highlighting Maruti. It's IFL Securities top pick, 13,800 is the target price that they've put on this, and for BofA as well, it's a buy with a target price of 14,000 on the stock now. Persistent Systems, they've launched an AI-driven contract management solution, and that stock is well higher by about almost 4%. And then, of course, all the QSR channel checks, they've led Macquarie to initiate and outperform on Devyani International as well as Sapphire Foods. Those stocks as well pretty buoyant from the word go today. But let's welcome on board our chartists and our experts and figure out what is it that they are making of the market. We've got Dipan Mehta joining in on the fundamentals and Naresh Mirani then on the technicals. Gentlemen, hi, afternoon, both of you. Naresh, if I could come to you first, what's the Nifty telling you? Because it's much unlike yesterday, where also we had jagged edges, but today we're unable to actually pull through the green.
So we are still struggling and trying to find a base around this 23,000 mark. Till the time we don't see a 300, 500 pointer bounce back from the lows, a range is not formed. So for now, 22,800 to 23,000 is a support. On the higher end, 23,600, 800 is a resistance. But we are not seeing any strong bounce back as of now. But overall, we are oversold on the broader markets. If we look at the Nifty and remove out IT and Pharma, we are already at 21,500, 22,000 for the rest of the market.
Point taken. That's how the market setup is, but the broader market strength again and these individual names is something that one needs to watch out for. Dipan Mehta also with us on the show. Dipan, what would you do with a stock like Kalyan Jewellers? It's down almost 11%. Is there any buying at dips which would emerge, or do you think there's just a case of falling knife and one should stay away till the time they don't figure out what's exactly is happening within the company?
I think, first of all, good afternoon. Thank you for having me on your show. I think Kalyan Jewellers, the pre-quarter release was interesting. I think amongst entire peer group, they reported the highest sales growth. And this particular wedding season has been good for the jewelry industry. Titan also came and all the other companies also came with very good releases pre-quarter where they gave the sales numbers. And gold prices have moved up. So obviously that's getting reflected in their turnover as well. Valuations are still reasonable. Companies got a decent footprint to increase its stores and distribution network, and they have made some foray into some online portals to try and sell jewelry as well. So I'm not negative on Kalyan Jewelers, and I haven't heard anything negative on the stock for it to merit this kind of a correction. But on the whole, I think if valuations come into reasonable zone, then the jewelry industry is something which has got a very nice and long runway for growth, especially considering the shift which is taking place from the unorganized sector to the organized sector.
Point taken. So that's about Kalyan Jewelers, but I wanted to put the spotlight on some of these other retail names. I mean, Shoppers Stop came out with a very strong set of numbers, and that's, kind of refreshed the sentiment for the entire retail segment. Trent, of course, is partly getting a bit of a thumbs up from the Elara note with 8,500 rupees target price, but you do have Nykaa, which is doing okay, and a couple of these other names, ancillary of sorts, the Phoenix Mills, etc., are also holding up in the green. What do you make of the retail sentiment? Dipan, do you anticipate a bit of a recovery in mass consumption?
I think it's evident in the pre-quarter releases which have come. Phoenix also gave a pre-quarter release. Some of the other retail companies also gave, and now we have Shoppers Stop's numbers as well. So I think that we are seeing a mild recovery in the entire retail space, um, but valuations on the higher side. So from that point of view, one needs to be a bit choosy as to which stock they decide on, especially considering that the growth may not be completely even. But yes, I think the early signs are that the retail sector is improving. Urban consumption has picked up, at least in this particular segment. It's an important trend to follow because if it is actually picking up, then there are lots of interesting names with very good companies, good corporate governance standards, excellent track record, asset-light businesses. So a lot of ideas can emerge if you are sure that the retail sector has picked up. But one caveat, that being that the base effect is favoring these companies at this point of time. So one needs to keep that in mind and assess whether actually progress has been made or lost ground is being recovered.
Quite interesting. Before I take it across to our, reporter and get in another news story on the power companies based in Uttar Pradesh, Dipan, just one question. The point that you were making about the organized plays now within the jewelry retail space and what you said about the consumption plays like a trend as well. Tell me, do you think Kalyan Jewellers has fallen enough to be, bought right now, or do you think right now could be like, catching a falling knife? And is there any other stock that you think is better within the jewelry retailer space?
See, our view remains very cautious on the market, and I think that a further correction is possible. So from that point of view, I don't want to go ahead and buy anything, even if it is attractive. I know normally we don't like to time the market, but look, all the signals are there for the market to correct. The structure has been completely, I would say, damaged. We are seeing what is a classic bear market or a correction in a bull market that only time will tell. So from the market perspective, I'm not that optimistic and positive. So I want to conserve cash at this point of time. Also, we're entering into a very important earning season and a very important event, Jan 20th, when President Trump takes over the US government. So I think that if there's more volatility, especially script-wise volatility, then you need to keep the powder dry to buy stocks, which would have corrected significantly and which are in superior businesses or very interesting business models. So that's the strategy at the right point of time, that we're just waiting and watching for the right opportune time to get into good quality businesses.
Right. Okay. Let's just take a short detour. And Uttar Pradesh, the state looks to privatize two of its loss-making discoms. That's Dakshinachal Vidyut Vitran Nigam and Purvanchal Vidyut Vitran Nigam as well, is what we are understanding. And the aim, of course, is enhancing efficiency and service quality. Anurag, my colleague, is here with more details on what he's picking up from his sources.
The state of Uttar Pradesh is all set to privatize two power distribution companies in next 6 months. So two power distribution companies, that is Purvanchal Vidyut Vitran Nigam and Dakshinanchal Vidyut Vitran Nigam, is said to be privatized under the PPP model. So the new PPP model would be the on lines of state of Odisha, which is a 50-50 partnership under the PPP model. So chairman of the company will be a IS officer of government, and MD, managing director, will be from the private sector. So timeline of this privatization is that consultation selection report in next 10 days. Then thereafter, a tender process will start in next 40 days, and the empowered committee approval will be given in the next 45 days, and the private firm selection to be done in 110 days. And after that, the cabinet approval will be completed in 120 days. Whole process is likely to be completed in next 6 months, under which these two companies will be privatized under the PPP model. Although there is a protest going on from state unions, the electricity unions, which are against this privatization process, but the ailing financial condition of these distribution companies is forcing state government to go for the privatization under the PPP model.
Devyani International, that's one stock which is holding out, and in case you're wondering why, it's got a Macquarie initiation. In fact, Snehi is here to tell us more about that note.
Well, absolutely. So Devyani International is a stock that's holding up pretty well amid a sideways market, and that stock was as high as 10% at one point of the trading day, but seems to have given up some of those gains. But nonetheless, 8.89% higher is where the stock is right now. On the note of Macquarie coming in, where they've initiated an outperform rating target at 230 rupees per share. They see healthy EBITDA growth for Devyani, which is the largest Yum India franchisee, and also in KFC, given the favorable geographies and a competitive position that the brand has when it comes to the entire chicken space. Pizza Hut may take some more time, it may take longer for a turnaround. However, what Macquarie is pointing out is that they see upside possibilities in some of the other brands that Devyani International owns, like Costa Coffee, Wango, as well as some other brands. They've initiated an outperform given the near average EV to EBITDA valuation and their outlook for high teen EBITDA CAGR in Thailand over the medium term. Devyani International also has emerged as their top pick in the QSR space, followed by Westlife, Sapphire, Jubilant Foodworks as well. And for Sapphire Foods also, they've initiated an outperform rating with a target price of 390 rupees per share. But while all sounds good, they are also cautioning some alarm when it comes to Devyani International. Some key risks that they are flagging off is a sharp rise in the royalty rates, increase in the competitive intensity from peers, and they are also interestingly flagging off a brand boycott call if this brand may face any link to any geopolitical issues, and that may risk the SSSG, which is the same store sales growth for the company as well. But overall, it's a very bullish note coming in. They've initiated an outperform target price of 230 rupees per share. On the back of that, Devyani International is up and away in today's trade.
International doing quite well, and of course that budget related consumption boost is what Macquarie has been talking about as well. Shrikant Chauhan also joins us on the show to talk to us about technicals of some of these stocks. Shrikant, hi, good to be speaking with you. Well, what do you make of Axis Bank? That one is coming under acute pressure just ahead of its earnings. And then, of course, we'll also watch out for big boy Reliance Industries to come out with earnings. We'll get our research analyst to join us to talk to us about the fundamentals and what to expect. But on the charts, would you recommend any position on either?
Good afternoon, everyone. See, like for Axis Bank, our view is that it is forming lower top, lower bottom series, and it is not holding at any important support levels. In fact, it has broken the level of 1040, 1050. Based on its technical formation, I'm expecting stock to fall towards the next levels of 980 or maybe 970, 75. So in the short term, we are expecting further more weakness as it is forming lower top, lower bottom series. So I think at these levels, there is no point in taking any specific bullish call on the stock based on its technical pattern. But if we consider Reliance Industries, then it is relatively doing much better. And based on its technical formation, I am expecting stock to move towards at least 1300 to 1325 in the near term. Also, the markets are in the range, and till the market is not breaking the level of 23,000, we could see some bounce back towards maybe 23,000 300 or 400 sort of level. So in that, I'm expecting that bounce back to come from large cap companies. And that's the reason Reliance looks good at current levels to buy for, with a target of close to 1300, and we can keep stop loss around 1230 for this.
Right. Okay. That's that on Reliance. But you know what? We'll have to take another break. Dipan, apologies. We'll let you go before that. Thanks as always for tuning in, but have to take a commercial break. Be right back. We'll continue tracking markets.
Welcome back. Well, the market has moved a bit into the green, but not a runaway rally or anything, but just a bit. But Sunil Subramaniam also joins us on the show to talk to us about fundamentals. Sunil, should we have any expectations out of the budget, or do you think it's a bit of a non-event, maybe that usual uptick of 5 to 10% in various allocations, but that's about it?
No. Far from it. I think this is one of the most important budgets of the NDA period, because I think it represents a balance that the government has to provide for. I think in the past so far, the unstinted focus on capex has been a defining feature of the budgets, right? And the focus on getting revenues, right? This time around, if you see from the fiscal deficit numbers that have come in, the tax collections that have come in, it's very comfortable from a revenue come tax perspective. So there's no threat to them meeting the fiscal deficit. So that's one thing. So the drive to generate that much more revenues is going to be less. That's one factor. The second aspect is between a continuous focus on capex, right? End of the day, I think today the fact of the matter is that the government's expenditure on capex hasn't filtered down to the common man. So that's why you're seeing mass consumption getting affected, which in turn is affecting a lot of the GDP growth and the rest of it. So the government is got to be sensitive to that. I expect that to come into play. How to divert more of their expenditure, whether capex or revenue, so that it filters down, the trickle down to the bottom is much more effective. I know the government, by doing direct benefit transfer, has stopped the leakage of this, but still reaching that to the bottom, I think, has not been adequate. That's one of the reasons that the Lok Sabha election results weren't up to speed as far as the government was concerned. They course-corrected in terms of their actual spending patterns to facilitate Haryana and Maharashtra elections. There were a lot of giveaways, Ladli Behan scheme and all of that. So I think that was clearly then a direction to the government that we need to take care of the common man more. And capex is all good, but ultimately, so what they need to find a way now, and especially given the fact that there are two major elections before the next parliamentary election, that's the UP and Bihar. So the government has to now find a way to filter in the populist element within an overall development agenda. They can't give up the development agenda. Why? Because ultimately this government is pro-business, pro-growth, so they will not give up their hand on that. Second is, who's the budget read by? Who's where is important? The more important are the rating agencies, right? The more important are the FIIs, then reaction to the rating agencies' reaction. To that extent, right, they will maintain fiscal discipline. They'll also maintain a focus on capex, right? So this year, I don't know what the revised estimates are going to look like. 11 lakh crore that they budgeted, I doubt if they are going to be able to spend it based on what's happened in the first 6 months. So there will be obviously an amp up on the capex in this month and going on till March, but still they may fall short of the 11. And on the back of that, whether 9 or 10, whatever number they finally come up with the revised estimates, on top of it, they will show growth. But because they didn't spend 11, the growth amount also need not be that much to show up inclination. But the second aspect is they have to find a way to get money down to the poor, the lower middle class, and the middle class, right? And that is going to be the balancing act that the finance minister and team have to do. And I think it's going to be very keenly watched, because one is, how much do you allocate to capex and revenue? Because revenue expenditure arguably goes straight to the bottom. The second is, even within the capital expenditure, how do you choose that capex which goes down to job creation, goes down to getting money in the hands of the people, right? So that's one thing why I think that this time it's going to be a very nice budget to read the fine print, understand it, and then react. But there is no question about it that I feel that the populist element, whether right through revenue or through development oriented towards populism, which is what I call developmental populism, is going to be a big challenge and task in front of the government, and they will have to address it. And I think that how do they pull that off without making FIIs stroke rating agencies unhappy? And domestic DIIs and domestic fund managers would not be too unhappy with this shift towards populism, because ultimately for our country, what's the fact? The fact is government has been spending on capital this year, albeit less. But the fact is that the GDP growth of the economy cannot really go on an upswing to 7-8% unless private sector capex steps in a big way. And the reason private sector capex is not stepped in is because capacity utilizations have got stuck at the 76-77% levels. If that has to go to 80%, you need mass consumption of mass products, two-wheelers, FMCG, consumer staples, those things which are consumed largely in quantity but not in value terms. The economy's K-shaped recovery is actually translating into the fact that capacity utilizations aren't growing up. So any effort by the government to go towards populism, whereby the mass consumption picks up, will be a good sign that by the end of the year, you can expect private capex also to pick up, and that will be really then a good growth prospects. So for me, it's not, as you mentioned, right? It's not a Thanda budget. I think it's a budget which hopefully the government will put a lot of thought into it. And based on those takeaways, I think that the future direction of the market will also depend.
Right. Sunil, what's the anticipation then from earnings? Because we're counting down for Reliance's. Can it really pull off any magic, much unlike the previous big boy, HCL Technologies, you think?
It's difficult. Because it's a conglomerate, right? The retail part is definitely going to be hurting, right? They're just investing in that business. The telecom part should be okay, but I think overall on the refining part, the recent spike in oil prices would be favorable. But over a period of the last 3-4 months, oil has been very steady. So that's not going to be very helpful. So overall, I don't think that this earnings... See, and I'll tell you one more thing. I think the market is also kind of not looking so much at the earnings as much as the guidance that the companies are going to talk about in the earnings season. I think the future is far more important than the past. What has happened in the past, yes, there will be disappointment, there will be positive surprise, negative, but the market will quickly absorb it. But they will focus on what those companies are talking about, their order books, what they see the way forward, what they're talking about, whether they're going to do expansion plans, brownfield, greenfield. I think that talk, that language, that body language that comes through is far more important for a future direction than the actual quarterly earnings of the October, November, December quarter, which is going to come out.
Okay, point taken. But since we're talking about Reliance, let me take it across to Varun to get the expectations from the street. Hi, Varun.
Well, so we are expecting decent set of results from Reliance Industries, wherein the revenues and EBITDA is expected to grow by around 4.6 to 4.7%. The profit is expected to grow by around 10.7%, and it will reach around 18,337 crore rupees. The margins, if you see, we are expecting a 30 basis point increase in the overall margins. The margins will increase from 16.9% to around 17.2%. The overall results would be supported by the Jio business, wherein we are expecting the ARPUs to show an increase of around 5 to 6%, and the ARPUs will reach above the 200 mark for the first time. We are expecting the ARPUs to reach from 195 to now 206 rupees. Also, for the other business, if you look at the oil business, the oil to chemical business is expected to show weaker performance. The petchem business is expected to show weaker performance. The refining business, although, will show some better performance. If you see in this quarter, on a quarter-on-quarter basis, the Singapore GRMs were up by around 38%. So that would be reflected in the overall GRMs of Reliance Industries as well. When it comes to the retail business is expected to show muted growth. On a year-on-year basis, if you look, the growth would be around, it would be flat or it would be around 1% only. So if you look at the overall results, the results would be decent. It would be supported by the Jio business, wherein the ARPUs would be crossing the 200 levels for the first time.
Okay, that's the take coming in on Reliance Industries. Let's just take stock of how is it that we're shutting shop for the day. And I haven't managed to resurrect a whole lot while we've definitely come back a little bit flat. But 23,200 thereabouts is where we're currently at. Sunil, just wanted to figure out what your sense is, since we were just talking about earnings, where is it that you anticipate any kind of positive surprise which may not have been baked into the prices in the stocks just yet?
Is not expected. See, I think auto is one where I think overall the numbers in December were fairly decent. So perhaps depending on the discounts at which the prices were sold off those vehicles, right, you could see a positive surprise in those numbers. Otherwise, I'm not very confident that unless the market has actually downgraded the consensus previous quarter, otherwise the numbers are going to be fairly soft relative to the previous quarter. So I think versus expectations, there could be some positive upticks because everybody's kind of downplayed it. But otherwise, I don't think overall the quarter itself as a standalone is going to be a very great set of numbers.
Right. Okay. Shrikant, just wanted to get your sense in on some of these charts. Bajaj Finance, M&M, and then Reliance ahead of the numbers tomorrow.
Like this NBFCs are doing much better if we see the trend of last few days. And in that, if we consider Bajaj Finance, then it is like flat. It is not like above its important resistance levels, but at the same time, it is very close to its long-term support levels as well as short-term support levels. And from here, again, the stock can rebound to the levels of 7,400, 7,500. So for the time being, I'm expecting Bajaj Finance to remain in a range, and currently it is very close to its support level. So at this level, it's a buy. For Mahindra and Mahindra also, we are bullish, and currently the stock is down. But overall, if we see the performance of auto companies, then they are relatively much better than other sectors. And most of this stock again fall into their important support levels. So Mahindra and Mahindra at current level looks very attractive to buy around 2960, 2970 levels with a stop loss close to 2940. And again, we could see the levels of 3000 or 3050 sort of levels in the near term. So if there is any rebound, then I'm expecting Mahindra and Mahindra to do well from the auto space. We also like Tata Motors, but there we are going to see some more consolidation and maybe it will take some more time. But broadly, Tata Motors and Mahindra both should do well.
Tata Motors, M&M, betting on both those names. But Axis Bank, that's also due to report its numbers, where the NII is expected to reflect the loan growth and PAT is expected to climb 6% on a year-on-year basis. Gaurav is here with his poll.
Well, yes, Axis Bank is going to be the first private sector bank to come out with their third quarter's result. When we talk about system growth, we have already seen the loan growth has slowed down around 11%. Now, for Axis Bank, Street is expecting around 9% loan growth, which will be again slower than the system rate. And the reason being that slow deposit growth. We already know that LDR ratio for Axis Bank is one of the highest in the industry, and that is the reason we may see loan book growth constrained by the deposit growth. Other than that, net interest income is likely to follow the same trend. They are expecting this to increase almost by 9%, while PPOP may grow somewhere around 14% on a year-on-year basis. When we talk about asset quality, slippages may increase because third quarter is usually weak for agri loans, and at the same time, Street is also concerned about some of the retail book loans, and that is the reason slippages may increase. And overall, when we talk about profitability, we may see some impact sequentially because second quarter was already a quarter where we saw profitability was high for Axis Bank, and that is the reason sequentially Axis Bank's profit can go down, but at the same time 6% growth is what we are penciling in on a year-on-year basis. On the back of this, now when we talk about net interest margins, we may see contraction of around 6 basis points for Axis Bank in this quarter, and the reason being that the specific loan book growth that we have seen slowing down for banks. Lastly, in terms of asset quality, we are not expecting any kind of a major setback for Axis Bank, but on the back of this, any kind of commentary from the management on the back of asset quality, how the loan book growth is going to be in coming quarters, and how net interest margins will pan out is going to be a key thing to watch out for. Overall, we are not expecting any kind of setback, but in terms of number, a little bit of slowdown is what Street is penciling in for Axis Bank for third quarter.
Bit of a slowdown, and the slowdown is visible in the stock price as well because that one is down and out. But Infosys also comes out with earnings, and after a robust H1, the expectation is there is going to be a bit of a moderation there as well. We are expecting a 0.6% growth when it comes to the rupee revenue. The dollar revenue is expected to decline by 0.3% because there would be a constant currency or rather cross currency headwind to the tune of 70 to 90 basis point. So overall, a bit of a tepid set. There is no major headwind or tailwind with respect to the margins. So we are expecting the number to be closer to 21.3%. Tailwinds are expected steady, but of course the key would be the guidance upgrade. The street is expecting that the guidance will be upgraded to maybe 4 to 4.5% or maybe 4 to 4.75%. So that's something to really watch out for. For LTI Mindtree as well, there's going to be a slower growth, just 1.5% in terms of constant currency. But the bigger thing to watch out there is going to be the margin impact, because we're expecting margins to come at multi-quarter lows at maybe 13.6%, because there's going to be a wage hike impact to the tune of 190 to 200 basis points. So the operating leverage with respect to top line growth is missing, plus the hit of furloughs, plus seasonality, weakness in high tech and wage hikes. All of that will mean that the profit on a sequential basis might decline a bit. But Sunil, that begs the question, what to do with IT, because TCS saw a 6% gain post earnings, HCL Tech saw a drop of 9-10% post its earnings. The commentary from both were quite similar in the fashion that both were non-committal about growth. Both were saying it's headed in the right direction and that it'll need a couple more quarters to call it out. What do you make of IT pack right now?
I think IT pack has moved into a more of a safety zone compared to the growth zone that it was over. Ever since the Trump news came, IT has been rallying very strongly, right? So I think that's partly the depreciation, the dollar strengthening effect, and the fact that American businesses are going to be supported by the Trump administration, which means greater order books, right? So those two macro numbers were the ones which drove IT up. Now I think that, according to me, the dollar depreciation part is done and dusted, because dollar appreciation part, because I don't think Mr. Trump, when he comes to power, will want a stronger dollar. If he wants to make America great again and boost American exports, the dollar cannot be stronger. The dollar has to be weaker. So he's likely to favor a weaker dollar, which is to some extent then not very positive for the IT, but that's okay, because ultimately even those gains generally tend to get competed away by other competitors as well as by the big buyers in the US. So the growth aspect, though, I think will remain. And I think for that reason, future growth, regardless of what the commentary these people say, what's happening in America, right, is that corporate America is rebounding. You're seeing those numbers come through strongly. And I think the advent of AI in a big way in almost every industry will need IT consulting support. And I think Indian companies are up to speed on that. So I think the orders will be good. The growth outlook is good. But like I said, because the currency aspect has been a bit overdone, I feel that IT has now moved into a safer zone. It's definitely a must hold in a portfolio. But I would say the growth, the rapid growth in the stock prices and everything, those I think you shouldn't expect to repeat again. I think stability, which is the traditional place where IT is, right? It's the safety pack. And when the FIs return after all this Trump Jamela ends, right? I think they will come and pick IT. So IT will get buying support from overseas. So I think it should remain there as a steady part of the portfolio from a safety angle.
Okay, that's that on what to expect from technology. Idea, BSE, Paytm, Nykaa, HDFC, AMC. Sunil, clearly the market's got a lot of fancy to the capital market theme. And then, of course, some of these aggregator plays as well, be it a Nykaa or a Zomato. Nykaa, in fact, has moved up after quite a bit. I don't know whether this buying is going to sustain or not, but definitely that's the case for Zomato. That 220 low that we had day before got lapped up very soon.
I would say are the new India, right? Everybody talks about the K-shaped recovery in consumption, but you got to realize that the K-shape is actually happening to the incomes. And the second is the demographic change that India is going through as we're getting to a much younger population. So these two factors, right? When the K-shape sees through in savings, that's why the capital markets. You see the SIP going on month higher despite the markets being so volatile. You see mutual funds sitting 2 lakh crores on cash. That means they've got enough and more money coming into their counters. Now this comes through distribution houses. The obviously capital market infrastructure like BSE, NSE will benefit. So I'm very bullish on the overall new age, new India kind of a thing, whichever may call this. That is, the rise in the per capita income is getting spread. It's actually widening the disparity between the bottom and the top. So the rich are getting richer in a way. And I think if you see overall at the $2,800 per capita, I would say the spread is we have a lot of people at $4,000 and a lot of people at $1,500. So that impact, that's why quick commerce and all of these are also getting to pay, because the younger, willing to take technology on, willing to sit and order. So I think this change in the buying pattern, the change in the sales pattern, you have hit the nail on the head that both these are effectively reflecting the new India. And I'm very bullish that whatever growth prospects we are expecting, they would actually outperform over the medium term. Short term, there will be volatility, but these are definitely strong growth picks for me. So in the BFSI, the savings and investment side of the pie, and within the e-commerce, the quick commerce, and those kind of aspects are obviously the ones that, and fashion and everything are obviously a part of that.
Point taken. In the meantime, Shrikant, wanted your take regarding some of these other buzzers. Take a look at Thermax, up 7.5%. Keynes Technologies, up 6%. Dixon Tech, of course, got that initiation from MK, is also perked up around 4%. Indian Hotels is up 4%. Any of these actually the plays from Industrials Pack, Keynes, Dixon, Thermax that you're looking at?
From this particular space, we like Keynes Technology. Other stocks, I'm seeing they are correcting from the highs, and there is some bearish technical formation on daily as well as weekly basis. So Dixon number, I think there we should be cautious in terms of taking any specific trading call. But if there is any specific view of taking short-term bullish view on the stock, then Keynes look really good. It is trading around some at around 6575 levels, and from here again the stock can move towards the next levels of maybe 7,000, 7,200. And even if we consider the long-term pattern of the stock, then it is still in the control. If there is any correction, then again we should look for taking some position. I think now 6,300 is going to act as very good support for the stock. From the other maybe tourism or travel stocks, we like Indian Hotels, and there also we saw very substantial up move in the last 2 days. But in case if there is any correction, then close to 790, 795 levels, it looks good to buy and hold. I'm expecting this stock to again surpass its previous high of 850 or 880 sort of levels. So it's a buy at current levels, more on dips. So Indian Hotels and Keynes Technology, certainly we should look for taking bets with a medium down.
Okay, those are some of interesting stock ideas coming our way. Nuresh, what's your observation about, what kind of trend one is seeing today? Because other than some of those extremely beaten down names like a Paytm, Idea, Nykaa, etc., I don't know what definitive trend to really pick up in the market today.
So the main trend is the fact that we've stopped seeing follow-up price action in terms of selling in the broader markets as well as on the indices. So that tells you some bit of base formation is happening over here. And overall, the breadth has started improving in the last 2 sessions. So now we look out for a follow-up buying action. If that happens, then there could be a lot more opportunities. But the broader markets have corrected much more than the indices. So that pain is much higher, and that's the reason there could be stock-specific opportunities.
Okay, point taken. So that's the top recommendations coming in right now. But Shrikant, any BTSC trades from your end?
Yeah, I think at this levels, few these auto companies, I think they should do well in the near term. That's the view. We like Mahindra & Mahindra, on which already we have given call, but we also like Eicher Motors, which is currently trading at 5080, 5090 levels. There I'm expecting stock to move towards the levels of at least 5,200, 5,250. Today also, if we see the trend, then it is gradually moving upwards. So we can keep stop loss somewhere close to 5040 for the same, for taking any short-term call on Eicher Motors.
The trend on some of these buzzing stocks. In the meantime, M&M, of course, is cracking today. That's down about 3%. Bajaj Finance lower, Axis lower. That's pretty much the case with an ICICI Bank as well. A little bit tempered right now, and so is HDFC Bank. But Sunil, what is your sense on whether or not, whenever the market does rebound meaningfully, whether it's going to be led by financials? And within financials, again, what segment do you think is going to perform?
I
think that yes, I think that the rally will be led by the financials, and but then I would say that would be a week after the budget because market will need time to digest the budget, and there's the RBI policy on the 6th of February, right? So I think financials will. People's allocation will wait for the RBI policy because this rate cut scenario is still 50-50, right? It's going to come, not going to come. So there's going to be a lot of noise around that. So I would say that the true rebound rally, and the rally is going to happen soon because there's 2 lakh crore of cash sitting on mutual fund AUM today, right? And that money is waiting on the sidelines for all of this noise and news to go through. So post February 7th, I would see that. And I do expect BFSI because whether there's rate cut or not, right? I think that overall the budget will give an impetus to the consumption space is what my read is. And I think that financing of that is obviously a key element that needs to support that. But the fastest growing segment is what we just referred to a couple of minutes ago. It's the savings and investment piece of the banking and financial services industry. It's the stock market infrastructure, the wealth managers, the AMCs, the insurance companies, the distributors, brokers. I think that's the pack which will really rally because that's the one sustaining story is this continuous interest by the domestic investors in staying invested in the market through mutual funds and insurance. I think that's not got shaken. Consumption has got shaken. Capex has been here on there. The one continuing story around our country, if you see over the last year, is been this savings into the stock market. And I think that's a story which will get a boost. And that's what I expect will lead the rally in the post-budget time frame.
Really great to have you on the show. Naresh, let's quickly get in your BTST trades.
So that would be a buy on Power Grid, a defensive stock, stop loss at 296, target price of 310. Second is a buy on Indus Towers, a double bottom here and a breakout, stop loss at 348, target price of 365.
Okay, and let me now hand it over to Snehi. Shrikant, Naresh, thanks for your time. And Snehi, wind up the closing trades for us.
Absolutely, it's been a rather range-bound trading session when you take a look at the Nifty today. We've not managed to break that 23,250 mark. We did go above that. We've slipped slightly below that. And remember, 23,300 is the next resistance levels that have been pointed to us on the FNO side. And that is something that Nifty is having some trouble crossing. At least that was the case in today's trading session. So Nifty rather range-bound, just a 0.2% uptick coming in on the Nifty. 23,200 is where the Nifty is at. Let's pull up the Sensex because Sensex has done slightly better, just nominally better than the Nifty. 0.3% higher is where the Sensex is right now, above the 76,500 mark for now. Advance decline ratio very steeply in the favor of the advances today. So rather it was mixed. So it's looking rather balanced, and that's what has kept the Nifty very range bound today. Let's pull up the broader markets because they have also not done very well, but at least they have outperformed the Nifty today. Nifty mid cap up 0.4%. Nifty small cap has also done pretty okay in today's trade, a 0.4% uptick coming in on Nifty small cap as well. Let's take a look at Nifty Bank because that did see quite the dip coming in the middle of the trading day. Roughly around at 1:30 p.m. we had seen a 1% drop from the day's highest point for Nifty Bank and continues to trade rather flat. Holding on to the green by the skin of its teeth is Nifty Bank. Let's take a look at some Nifty gainers and losers today. Trend on the back of a brokerage note has done very well today. NTPC, Power Grid, Kotak Bank, Tech Mahindra, these are your top gainers. On the flip side, M&M is your top loser in today's trade, followed by Axis Bank. Now, Axis Bank was 2.5% lower on the back of a block deal. Remember, earnings are coming tomorrow for Axis Bank, so all eyes are going to be on that stock tomorrow as well. Bajaj Finserv, Bajaj Finance, Shriram Finance, all of these NBFCs and financials were also lagging away in today's trading session. Sectorally, surprisingly, it's Nifty Realty that has outperformed the entire market today. A good day of gains coming in for Phoenix, Raymond, Mahindra Life, Brigade and Oberoi Realty. So Realty has been shining away in today's trading session, followed by IT, which was largely held up by Persistent Systems. Of course, there's a news flow on Persistent Systems, very positive news coming in, where they have deployed a new software. So on the back of that, this stock was also up 3.6%. You have LTTS, Tech Mahindra, LTI, Mindtree, all of these stocks have done well from the IT pack today. However, what did not do well on the flip side today was Nifty Media, largely in the red. Nifty Pharma was your top sectoral loser in today's trading session. That was largely held on by DV's Labs, Granules, Zydus Life, Torrent Pharma, Lupin, Biocon. Remember, Biocon has been gaining back-to-back, so today that stock has taken a slight bit of a breather. So this is what the sectoral moves look like. Some stock-specific action coming in. NBCC was in focus today on the back of an order win of 405 crore rupees. So that stock has done pretty well. And almost a 2% uptick coming in for NBCC as well. Persistent Systems, like we mentioned, they've introduced an AI-driven contract management solution, new software upgrade, and on the back of that, Persistent 3.5% higher. Minda Corp has acquired 49% stake. Adani Green has also news flow. You have Macquarie, the note on QS. On the back of that, Devyani International was a stock that has done very well. BSE continues to be in focus. Cement continues to be in focus on the back of brokerage notes as well. Lots of stock-specific action coming in, but if you take a look at what the index has done today, Nifty 50, 0.2% uptick. That's a flattish move we've seen. Let's hope for a better trading session tomorrow.